Welcome to the Cashflow Ninja, the podcast sharing how to create and grow income streams and manage, multiply, and protect your wealth in the new economy. Are you tired of trading your time for money? Do you desire freedom today instead of retirement in 10, 20, or 30 years? I'm MC Laubscher, and this is the Cashflow Ninja. Hello, Cashflow Ninjas. MC Laubscher here, and welcome to another episode of the Cashflow Ninja. I have a great show for you today. And in today's episode, we're going to look at how you can turn the greatest political and financial upheaval in modern history to your advantage. My guest in this episode is Harry Dent. Harry studied economics in college in the 70s, but found it vague and inconclusive. He became so disillusioned by the state of his chosen profession that he turned his back on it. Instead, he threw himself into the new science of finance, where identifying and studying demographic, technological, consumer, and many, many other trends empowered him to forecast economic changes. Harry is a best-selling author and has written numerous books over the years, including The Great Boom Ahead, The Demographic Cliff, The Sale of a Lifetime, and his latest best-selling book is 0 Hour, Turn the Greatest Political and Financial Upheaval in Modern History to Your Advantage. If you've not checked out my new podcast, Cashflow Investing Secrets, I would highly recommend it. It's a shorter show, 10 minutes or less, where I share one concept and or idea at a time, what I've learned from interviewing over 500 Cashflow Ninjas. You can listen to the show on your favorite podcast, video, and live streaming platforms. We've also got an investment group and community for accredited investors. If you're interested to join the group, please visit cashflowninjainvestorsnetwork.com. You can also connect with the Cashflow Ninja community and all the other Cashflow Ninjas out there through our Facebook group. You can join the group by going to Facebook and typing in Cashflow Ninja Community. Savvy investors know that in order for the miracle of compounding interest to work, its magic, you have to be constantly invested in all stages of the economic cycle. So the question then becomes, how do you find solid investments when the stock market is close to all-time highs and everything else just seems so inflated? That's where our friends at ASIM Capital come in. Since 2011, ASIM has helped more than 300 accredited investors allocate more than $25 million to mobile home parks, self-storage, and workforce housing due to their ability to perform well during economic recessions. If you're interested in learning more, head on over to asimcapital.com. That's ASYM capital.com to get instant access to their investment offerings. MC Laubscher, the creator of the Cashflow Ninja and Cashflow Coach at Producers Wealth, where we help our clients integrate infinite banking with their business and investments. To learn how you can create your own banking system to turbocharge your investments and business in 30 days or less, go to yourownbankingsystem.com. That's yourownbankingsystem.com. With me back on the Cashflow Ninja podcast is Harry Dent. Harry, so great to connect again, and thank you so much for coming on the show and joining us again.
Sure. Good to be back.
Yeah, how are things out in Puerto Rico? You've been living there for a while now. How are things over there?
Yeah, a little over 3 years. I've been coming here for 25 years since I bought a property on an island called Culebra, which not many people know about. It's like the St. John of Puerto Rico, and Puerto Rico is a U.S. territory, so there's no passports, no problem moving here or traveling here. So I like it. You know, the mañana thing is a challenge, like it is in any emerging country, this is no longer an emerging country. The San Juan's a first world city now. That's one reason I can live here. So I love it. I mean, my property taxes are so low. On the one property I own is my vacation property on a big lot that's going 5 acre from 25 acre zoning. That's the only reason I kept it, frankly. Right. But the property taxes are so low. And of course, the income taxes for people who qualify from the state are so low. And then my condo on the beach is a quarter of what it would have cost if I'd have moved back to South Beach. So I'm a happy camper. And the weather's less hot than Miami at extreme. So I like it.
I've heard a lot of great things. There have been people going down there, and they remarked how impressed they were with Puerto Rico overall, because you have this idea kind of in your mind of what to expect. And then when you get there, you're like, oh, this is not really what I expected.
Yeah, I like the restaurants altogether better than Miami here. Not as good as New York, okay, or San Francisco, but I mean, that's pretty damn good for being on a Caribbean island.
Yeah, absolutely. Let's jump in to the world economy and world markets. What are you seeing? Where are we right now? Because you love talking about cycles, and I learned a lot on my journey from you through economic, market cycles, demographic, and then also the political cycle, which I know we'll get into. But what are you seeing in the world economy and in markets currently? And what do you see into the next couple of months? I guess we have to look into months and as opposed to just years, since we're another election cycle, another cycle's coming up, right?
Yeah, now first thing, I mean, I have the best long-term cycles because it's taken me 30 years to get it. I tripped onto demographic cycles in the 80s when I was consulting to new ventures, and they had the baby boomers as their new clients. And so I had to look at baby boomers, and I'm like, holy smoke, does anybody see how big this generation, how innovative they are and change-oriented? And they're coming at the U.S. economy and the world economy at the speed of light. And we're going to have the greatest boom in history. And people thought I was nuts back then because this was late 80s by the time I got my first cycles together and demographic. And I was predicting Japan would collapse while the U.S. and Europe and the rest of the world would have the greatest boom in history. People like, Harry, you got it backwards. Japan's taking over everything. Haven't you noticed? And the U.S. is a sunset country. I'm like, nope. They're peaking in their baby boom, and we're just getting going, and ours is a lot larger. So I was able to see the 90s boom when the Kondratiev wave, the only good cycle people I knew back then, Prechter and James Dale Davidson and Robbie Botcher and these sort of people, they were calling for depression in the 90s. I would have bought that because I was studying that cycle too, except I knew this baby boom was coming. So that started, but I had to eventually adjust after 9/11 for geopolitical cycle, a 35-year cycle I found. In the last several years, my co-author, Zero Hour, introduced me to the 45. Well, he just said 45 and 90-year cycles are important. He didn't know why. Well, I go back and find, oh, that's my missing technology cycle. So just when I got all my cycles together several years ago, guess what happens? We have the 2008 recession, something we'd call for more like depression at the beginning, way back in the 80s, called it down to the year, late 2007 would be the top roughly. And then central banks come in and say, well, sorry, we're not going to have the Great Depression. We're not going to have a reset. We're not going to let bubbles burst, not going to let banks fail, companies fail. I'm like, well, wait a minute. That's what happens. That's what's supposed to happen in the economy when you go to excesses. And so they've taken over. And so the biggest thing now, number one, everybody has to understand, central banks have taken over the free market system. Special interests have taken over democracy. So a lot of the natural cycles, they're still there, and they'll win in the end. But basically, we have a bubble. We've got Main Street growing at 2%, the same rate it grew from 1929 to 40 in the worst downturn in history, 2% on average growth. That's what we've been doing. We're just like what I call the winter season, but they've blown up the stock markets and the financial markets with all this quantitative easing and zero interest rates and free money. So we have a very slow economy despite massive stimulus, but we have stock markets, which I've shown in my recent newsletter articles, are overvalued 114% now from my spending wave model, which just shows where the economy and stocks should be based on the spending cycle of the generation baby boom, now baby bust, and soon to be millennials. So 114%, I mean, that's never been anywhere near that close. That can be explained simply by companies using free money from the Fed and low interest rates to buy back their own stocks and shrink the float. Earnings per share have grown 119% in corporate earnings. So that explains that entire overvaluation. So we got the greatest stock bubble in history at the worst economy since the 1930s. So my forecast is in the next 3 years, when my cycles, all three of them are at their worst together, 2020 to 2022, we're going to see this great reset, like 1929 to 32 crash. It's going to be mostly about getting stocks back down to reality, which would mean stocks would have to go down to about 5,000 on the Dow and then maybe settle more like 10,000 where they should be, 12,000. And real estate's going to have to come down 40 to 50% more than it did in 2007 to 2012, and that real estate decline and bubble. So this is something, a lot of people are saying, oh, We're hearing there might be a recession, the yield curve inverted. We know we've gone 10 years now. This really is, we really are. We do have had a recession my entire adult life, every 10 years at max, and we're past that now. But all this stimulus, and then now we got tax cuts. The stimulus is keeping it alive, but note that after the big tax cut in 2018, we saw a bump in the markets and a small bump in GDP growth. We're right back in the second quarter down to 2%, and most leading indicators are saying we're going to slow further. So the stimulus, it's like taking a drug. It always makes you feel better today, but you have to take more and more and more, and then at some point you just fall down and collapse, and they put you in rehab. Well, that's what we're going to rehab. I call it detox, financial detox. These bubbles have to burst. We have to get off of free money and zero interest rates and have people have to make investments that make a real return. And again, all of this stuff, get companies to invest. Companies haven't been investing. They overinvested in the bubble boom in 2007, and now they just buy back their stocks with all this free money and increase their stock prices and their CEO bonuses. So guess who's the dumbest money this time? It's not the shoeshine boys at 29. It's not the taxi drivers of late 1999 and the tech bubble. It is the Fortune 500 corporate managers. And in real estate, guess who's buying the most overpriced real estate? Billionaires looking to park money and money launderers around the world, especially the Chinese. So this is the smart money now is the rich people. I've never seen that before. That's really scary.
Yeah, you make a lot of great points. One of the things I wanted to ask you too is because, and I'm glad you touched on that too, is basically how special interest obviously has taken over the government, and then corporations have sort of taken over the markets, the free markets. That was one of the questions that I had because, I never want to say those words that could it be different than from other crashes because they all, I think it was Mark Twain that said, his history doesn't necessarily repeat itself, but it sure does rhyme. But one of the things that I've seen is it's become so financialized, the financialization of markets. And you mentioned the Fortune 500, just the stock and shares buybacks is ridiculous. And then also the computer trading, in a split second of trading. And then also most people refer to them as the plunge protection team, folks that come in and purchase. How does this affect what could potentially come from a market standpoint? Could it be, a massive correction? Could it be a large correction? But it's become so financialized that there's so many tricks and tools that they have to kind of stall a sharp decline that in the past. Could it look the same, or what are some of your thoughts on that?
Okay, yeah, that's a great question. There's two opposing points. My first story is I was in Dubai speaking at this giant conference, biggest thing I've ever spoken at, and late 2006. And basically I was looking at their bubble. They had one of the biggest stock bubbles in the world, and cranes oh my God, cranes like Miami today or worse. And I said, hey, this is going to burst. And people said, Harry, you don't understand our market. The government supports it. The governments will buy when businesses and consumers don't. And I said, oh, well, now I'm really worried, because that's what's happened here. Yeah. Government, no accident. Story number two, Federal Reserve, first central bank in a long time in America, since Andrew Jackson or something, comes in 1913. And guess what? 20 years later, we see the greatest stock bubble in history and the greatest collapse in depression. That was no accident. When you don't let the economy correct along and have little recessions and corrections and stuff, then it just gets more overinflated, more bubbly, and it goes nuts. That's what we have here. All these tricks, and now tax cuts. Trump's already talking about a payroll tax holiday for everyday people. Okay, we gave money to Wall Street and the banks. Then we gave money to corporations. Well, now let's just give it to Homer Simpson. Look, I'd have given it to Homer Simpson in the first place if you're going to give it away. So it's all things, but it has less and less effect. And what it does, at this point, I think what I was trying to make my most important point right off the bat. We're in an economy that all doesn't have much to do with fundamentals near term. It's just a bubble that's going to go till it blows. It's going to get more stretched. Now, every time it gets stretched, note that every time we've had a crisis, tech wreck, okay, stocks are down 40-some%. Oh, the great financial crisis, they're down 54%. This time it's going to be 70, 80, 90 by my calculations. So since you stretch it more, when something goes wrong, the rubber band goes the other way. So it will be a bigger stock crash than last time. Now, the flip side of that, the opposite argument, which I hate because it's the worst scenario for me, that we just become Japan, US and Europe, because Japan was the first to start QE many, many years before us, because their bubble collapsed in late 89 for stocks and 1991 for real estate. They both collapsed in the early 90s. So they got their reset before quantitative easing could offset it. So the quantitative easing was to keep the banks from going under and businesses. So they have never deleveraged their debt, written off debts, which is a huge thing to go forward. Act like they have low unemployment when they don't. Everybody's working half time because there's nothing to do there in a slow economy. We could become Japan. Now Japan, for almost 30 years since that top in late 89, has been in a coma economy. Zero average, and in recent times, 0 to 1% growth, 0 to 1% inflation, and some deflation at times. They're just flatlined. And they're aging, and they're not attracting immigrants because they want to protect their culture. They're not deleveraging debt, which would at least help the businesses and consumers that are over in debt there. And they're dying.
Yeah.
Economy. So what we could have is a crash, like I'm saying, and maybe it doesn't go as deep because they just step in and then flood it. Now, last time it was 4 trillion from the Fed. Now this time it's 10 trillion, and everybody does their 10 trillion, and they just keeping us anesthetized with free money, and we just kind of sail slowly in the sunset like Japan. That's unfortunate because our demographics are a little better. Our innovation is a lot stronger. So that's the worst scenario to me, but that would say we don't have as big a banking crisis like Japan, but we still, I tell you, one way or the other, stocks have to come down to reality. Real estate has to come down to reality. You can't keep any asset class overvalued this long. And they've been supremely overvalued really since the late 90s. And we've got them from more fair value back to extremely overvalued in the last 10 years. So this cannot last. We're going to have some sort of reset. So that alone is reason to get out of the way. But at worst, which would be my best scenario, we do have major bank failures. We do have higher unemployment, business failures, that we wash out all this debt, and that takes a big burden off the economy. People don't realize 29 to 32 may have been the greatest crash, the greatest downturn, the highest unemployment, everything you want to say, but we came roaring out of it because we cleansed the system so fast. So I'd rather see the more difficult scenario because it means we're doing the right thing. Puerto Rico, I'm in Puerto Rico right now. People are like, what are you doing in a bankrupt nation with a corrupt government? Well, their corruption's being dealt with. They are restructuring their debt down like 70 to 85%. That's what you do. The people who took the risk, especially the investors and the financial institutions, need to take their losses. And if they fail or get taken over by another bank, then so be it. That's fine. AIG could have failed. They had good insurance policies. Another company would have taken over. It would have been fine.
Yeah.
So you have to wash out the debts. And that's what I'm afraid we won't do. In that case, we won't have as deep a downturn, but we also won't come out of it. Again, spring, summer, fall, winter. We've gone from the fall bubble boom season, 2008 crash since in winter, but with super stimulus and overinflated markets. We don't get to spring. Japan should have been in spring back in 2002. They've never gone to spring again because they never let winter do its work. So these economists who think they're geniuses and think, oh, we've got new Keynesian economics and we don't need to have recessions anymore. Recessions are like the common cold. They're not your enemy. They keep you healthy, you idiot. I mean, people don't understand that. Oh, cold. Oh, I got to take codeine. You know what codeine is? Heroin. Basically, everyday heroin. You're knocking your system out and keeping it from getting rid of bad stuff. That's why you have a cold. Cold doesn't have a cold just to have fun. Yeah. It's helping you, just like recessions help the economy constantly cleanse out the waste and the excess debt and the underperforming companies and the bad banks and the bad employees even. This is a healthy thing to do. Unfortunately, since we haven't done this in the last decades, we're going to have a big reset. And that's what I'm warning. Once in a lifetime crash, which if you flip that coin around, the positive side, once in a life sale on everything from real estate to gold and commodities to stocks and companies. Everything's going to be on sale.
Yeah, and I would highly recommend listeners and viewers check out that book, Sale of a Lifetime. It's a great read too, explaining this and how there's a positive side to this, because this is going, as you mentioned, we've been partying all night. There's been a lot of drinks. Eventually we had some, maybe some tequila too. We can't keep doing that. We're going to have to face a hangover and move on from there.
And then don't take more drugs to fix the hangover. Just go to the hangover. Drink a lot of water. Stay in bed a couple days. That's what we need to do. By the way, MC, our most recent book is 0 Hour. I'd recommend reading that just because it's more up to date.
Yep, absolutely.
Our whole point there, don't look at this as a bad thing. If you see it coming, preserve your capital near the top of a bubble, which you have undeservedly gotten gains, and then use those to rebuy like Joseph Kennedy did, when things are down 70, 80, 90%, or real estate down 30, 40, 50. That's the greatest thing that could happen to you. Greatest single way to build wealth in a short period of time.
Absolutely. And it's understanding all of these things, because you hear, and of course in today's very, very, social media world, you see a lot of quotes, buy low, sell high, that kind of stuff. And it's like, duh, but it's like, this is how you buy low and you sell high, right?
And
understanding all of this.
This is the extreme example. And this has gone on.
Yep.
I mean, you got to get bubbles by their nature, suck everybody in before the Titanic sinks. That's when everybody's on board, the smart money realizes that, because they measure what we do down to detail.
Yep.
They know. And that's when they get out and they short the market, and then these crashes happen very rapidly because of that. So this is an exaggerated version, which means it's not just, a 20% stock correction coming, it's 70 to 90. That you do not want to sit through. And real estate, especially when people have mortgages against it, we saw what happened in 2008 and 9. So many people underwater, losing their houses, foreclosures. Well, that was a 34% correction on average. I'm looking at 40 to 50% this time, because we're more overvalued now. So that is going to cause a lot of pain. It doesn't cause pain if you see it coming. That's the point. And if you do see it coming, every time things go down in value and you preserve your cash and your money, now it buys more and more and more. It's a blessing if you see it coming.
Yep. Absolutely. Let's touch on commodities a little bit. Gold, silver, oil, other energy commodities. What are you seeing there currently? What's going on there?
Well, I love the commodities thing, because years ago I told people, look, when this happens, it's not going to be 30, 40, 50% stocks or whatever. It's going to be 70, 89. Commodities have already crashed at worst 70%. Oil, iron ore, 80%, silver 70%, gold 45%. It's the one that's held up the best because of its luster. But commodities bubbled and they crashed. Now, commodities had their first crash, and then they had a rebound. They're going to have a second crash. If I had to hold anything right now, I'd hold the commodities, because they're not as overvalued, but they're still going to go lower. Oil's going to go lower than 26. Gold's going to go lower than 1,050, which was it low. It's somewhere between 700 and 1,000. Silver's probably going to go under $10. That's when you buy.
Yep.
Commodities are one of the best cycles, MC. I mean, one of the first ones I had way back, 30 years like a clock. 1920, 1949 to 51, a double top. 1980, the one we saw in our lifetime. Commodities top. Gold and silver top with the commodity bubble. Yes, they're inflation hedges. Yes, they did well in the 70s because of that. Yes, they're a monetary metal, but they're a commodity more so. And gold and silver follow that commodity cycle. And when the metals peaked a little late in this one in 2011, gold and silver crashed. Now, they have not bottomed yet, but I tell you, it's one of the first things I'd buy, because the next 30-year commodity cycle should start by 2022, 23 or so, and it will be unique at a time when demographics are much less robust for stocks, except for in the best emerging countries, and real estate has dying baby boomers suppressing it for decades ahead, all this stuff. Commodities are going to be driven by the emerging world, both in production and in the highest consumption. And the emerging world is going to be booming outside of China for a while. So I think the next commodity boom could be a great win. So when I'm debating gold bugs, and they're always saying $5,000. Yeah, they're talking in this crash. I'm like, no, gold's going to go down in 2008 like it did with the crash, with the deflation. But in this next commodity boom, yes, I could see buying gold as low as $700 and it going to 5,000, give or take, in the next commodity boom, which will peak about the time I die, late 2030s.
Yeah.
I can predict, but the point is I can predict that today. The cycles I have go throughout history, and people say, oh, Harry, but change is coming faster. Yes, each cycle sees more change and more progress than in the past. But these cycles, about 40-year demographic cycles, 45-year technology innovation, 35-year good and bad geopolitical, and we're near the bottom of that one, for thank God. I think this Iran thing is the bottom, and these mass shootings in the United States are the bottom of that. But these things are constant throughout history, and the commodity cycle is one of those at 30 years. Now, another one real quick, MC, every other technology cycle, those cause the most bubbles. You get a super bubble, like 1929. We're right now in September, on the anniversary of the 29 stock crash. This one looks like it's coming later to me. I'm expecting this to peak somewhere between early 2020 and late 2020 at the latest. But this is going to be, again, the bubble of your lifetime and the crash of your lifetime. And man, if you can see it coming, there is no way you cannot be a lot wealthier coming out of it.
You're listening to the Cashflow Ninja, the show helping people all over the world create monthly cash flow and achieve freedom today, not in 10, 20, 30, and or 40 years. This is the show where cash is not king, but cash flow is king. We will be right back after a word from our sponsors.
Kings, queens, and royal families, along with the nobility and ultra-rich, have warehoused and stored their wealth for centuries in gold and silver, art, land, and real estate. These assets have stood the test of time through centuries and have been a great place to preserve and protect their wealth. Like gold, silver, land, and real estate, art has been around for centuries and will be around for many, many more centuries. That's why the ultra-rich will continue to invest in art and preserve their wealth in art. While the S&P declined 5.1% in 2018, the art market returned 10.6% and was called the best investment of 2018 by the Wall Street Journal. Masterworks is the first company to allow investors to buy shares of great blue chip art masterpieces by artists like Picasso, Monet, and Warhol. You can get set up on their platform at cashflowninja.com/art.
My friend Dave Zook from The Real Asset Investor says you can be conventional or you can be wealthy. Pick one. The Real Asset Investor team creates value for investors looking for higher yield returns from ATM machines and self-storage investments. Their syndications offer attractive investment opportunities that produce strong cash flow, equity growth, huge tax incentives. They are truly passive and managed by a world-class team. To learn more about the exciting investment opportunities the Real Asset Investor offers, such as their ATM and self-storage syndications, please visit cashflowninja.com/real asset investor. You're listening to the Cashflow Ninja, the show helping people all over the world create monthly cash flow and achieve freedom today, not in 10, 20, 30, and or 40 years. This is the show where cash is not king, but cash flow is king. Now let's return to our interview.
Yeah, one of the things you just mentioned, technology, and I had a note here too, is there's a lot of quote unquote technology companies. They call themselves technology companies. A good example is Uber, for example, right? Still losing a ton of millions of dollars. There's a lot of other technology companies losing money every single year, but they still go out, they still raise, and I mean, it's still going on. So maybe you have a comment to add to that too, because that's, I mean, obviously there's a lot going on there with technology, and there's some great technologies being created, but a lot of these technology companies too. I mean, how long can a company go just losing billions of dollars before they eventually pull the plug?
It can only go so long. You know, sometimes that is necessary, but we had that. I compare this crypto thing right now and a lot of these new IPOs to the internet IPOs, starting with Amazon. I think it was in 1998 or late 97, All of a sudden, these companies with very little sales, no earnings, except for AOL, and they were valued at 400 times earnings, which is absurd, way overvalued because, they're the next big thing. You're coming off one tech bubble, and the new ones are emerging, and everybody's thinking, well, they're going to overnight. No, the internet companies are only maturing now, and they crashed 93% in that tech bubble burst, and they were the last fling of that tech bubble. I see the cryptos in some of these IPOs like Uber and the social media and WeWork, for crying out loud.
Yeah, that's another one.
Company trying to go out for 60 billion or something. That shows we're in this last phase. And my question is, has Bitcoin peaked or not? In one scenario, it peaked in late 2017. I was looking at the possibility of one last surge into late this year. This recent correction just basically took that out. We have the halving coming mid next year, May of 2020, and Bitcoin issuance. That often signals a bubble. If this bubble in tech lasts a little longer, if Trump can kind of keep this boom going into the election, which there is a chance. I think it's getting harder and harder. If he can, we may get one more bubble in Bitcoin. If that happens, sell and run. That's what's called the hype phase, the early phase starting. They will crash. 90% of those companies with no profits and no possibility, including Uber and stuff, will go under. And then the survivors like the internet and Amazon in the early 2000s will create the next boom. And a smaller group of companies will create real value, huge. You could have bought Amazon. It peaked in 160 in early 2000 with that tech bubble, fell to $6 in 2001. And it's recently been over 2,000. You could have bought Amazon at $6.
Yeah,
that's ahead. That ain't. I wouldn't buy these Bitcoin companies now. But when they do crash, the fact that they bubbled this big is a sign that they are the next big thing. That is the hype phase. It's another predictable phase of technology. So we also, in my books, we map out the S-curve progression, how new industries and technologies emerge and are adopted. It's totally predictable. You know, how long it takes to get from 0.1 to 1% to 10% adoption to 50 to 90, where you have big crashes and shakeouts in companies. I mean, automobiles started at 100, then went down to 30, then went down to 10, then down to 3 in the U.S. That's what happens. Nobody sees this stuff coming. It's another clock. People hate cycles. What I have to deal with, MZ, people hate cycles because cycles imply that you're going to have a negative cycle for every positive. You're going to have pain for every pleasure. And life is that way.
Yeah.
What people want is a zip line to heaven. And that's not what life gives down here on earth. Right. So, but the thing is, if you understand cycles and you're ahead of them, that shakeout is your advantage as a business. Your competitors go under. If you're ready for it, you're not going to go under. And they're going to go under. And you're going to walk out of it with 40% market share when you walked in with 20%. What's so bad about that, having a few difficult years, if you're prepared and hunkered down? And again, same with investment. So cycles are your friend. Imagine if you didn't know when the sun was going to rise, or if you're a farmer and you didn't know when spring. You know, farmers used to have to guess when spring was going to hit. They didn't know it was an annual cycle for a long time. That was part of the agricultural revolution. People had to be able to time the annual season. And seasons come in this annual season comes in 4 seasons: spring, summer, fall, winter. I put everything on those 4 seasons and everything on a 4-stage progression so that you can see the next stage before it happens.
Yep. One thing that was fascinating for me when I really started and was immersing myself in, I love history and economics. So I immersed myself in studying history, and then you see world history and world events, especially geopolitical events. But then you bring the money side to it, what's actually happening in the economy and markets, and then also, you know, the monetary system. You put central banks, the history of central banks and charters being revoked, you know, like, for example, in the United States, the War of 1812, right, happened to occur right about a time when a banking charter was revoked, a central banking charter in the United States. So you put all these two things and align them up, you get the geopolitical kind of cycles which coincide with all of these. That's another thing that you've mentioned. Can you speak to the geopolitical cycle right now, where we are right now, because obviously if you look at the news, you see the China trade war. You see trouble with Iran and Saudi Arabia, which might tie into the oil, right? It's not just friction. There's a reason for the friction. So all of these things are kind of coming back to economy, markets, and money, these geopolitical events. Can you speak to some of that?
Okay, that's a good question, because my primary geopolitical cycle I only got when in the early 2000s, we were telling people to buy. That crash, say, no, the baby boomers aren't done spending. As we said from the beginning, they won't be done until late 2007 or so. But I said the Dow is going to go from whatever it was, 6,000 to 32,000, like the last bubble. Well, it didn't. So a few years into that, I realized, no, earnings are growing as fast, the economy's as good as I thought, but stocks aren't going up as fast. What's wrong? That's when I discovered the geopolitical cycle. So 1982 to 2000, positive geopolitical cycle. 17, 18 years positive, 17, 18 years negative. 9/11, we've been on nothing but negative ever since. Terrorist events. Yeah, but also wars all throughout the Middle East. Now we've got homegrown terrorism, white supremacists reacting to the bad Muslims, creating more problems than them. And we've got this final Iran kind of conflict and all this stuff over oil and Saudi Arabia and things. So my cycle says this is bottoming in late 2019, early 2020. This is the one cycle that's going to turn around slowly and be favorable, while demographics stay unfavorable and technology stays unfavorable, the latest. So we have more mixed cycles now, but that cycle, this is a sign. It is at its worst. But it's not going to get a lot worse, I don't think. Now, flip side, I have a bigger cycle, 250-year revolution cycle, i.e. back to American Revolution and democracy. That was the biggest thing that happened in history, because the Industrial Revolution and free market capitalism came at the same time. In the same year, the key benchmark, 1776, everything, boom.
Yep.
And then the 84-year populist cycle, like Hitler. In the early 30s, Hitler and Trump are exactly 84 years from their inaugurations. And so we got a populist cycle. So that's a bigger cycle. So this geopolitical part, just like Middle East wars on, that's probably seeing the worst of it. But we are going to have to see a lot of reforms in our financial systems and democracy system. I mean, what did we start out talking about? Central banks have taken over free market capitalism. The biggest reason we've gotten rich, democracy has been its greatest ally, because it's the opposite and balances it. And so countries that don't have both don't do well. China has capitalism, but it's government driven, not democracy. So it's going to fail the worst. Russia tried that. They failed the worst. And so. So we're going to have a lot of reforms the next several years. So that part of geopolitical, and I think global trade has peaked like it did after World War I for a couple of decades. We may see a couple of decades before we get back to the same levels of global trade. So that's a long-term geopolitical thing. But the shorter, more nasty one we've seen since 9/11, that should be about over within, literally within months or something. And it'll turn around slowly like the Cold War did in the early 80s. Gorbachev came in and just started talking to Reagan. Next thing you know, damn, what happened to the Cold War? Oh, and then the Berlin Wall. That was right on that geopolitical cycle.
Yeah. Interesting stuff. So for listeners out there that's not familiar with some of Harry's earlier works too, highly recommend Demographic Cliff. And I mentioned Sale of a Lifetime. Your newest book is a 0 Hour. Do you want to just share with folks a brief summary just of what you get into the book and what the new book covers?
Well, what 0 Hour brings is that 250-year cycle.
Okay.
That's the biggest theme now. And again, we just have some just blockbuster charts. I mean, just showing has happened, what will happen. I'm like, why don't economists get this stuff? They're studying the symptoms and not the causes. And we look at how all these cycles, the most important thing about cycles, MC, that's taken me 30 years to fully get, and I learned it mostly from scientists who are the best cycle people in the world, is that there's tons of cycles. And the shorter term ones, there's many more, and that's why short-term forecasting is harder. As you get longer term, there's fewer cycles. The key is to determine a hierarchy, usually of 2, 3, or 4 at most cycles that most impact. If you get into 5 or 10, then you're going to get so much cross signals, you're going to be confused. I'm not going to mention his name, but I talked to one of the best cycle guys in the world, and I learned nothing because he had too many cycles. He had cycles of everything. It's 7 cycles on gold alone. So I'm like, well, what do I do with that when 4 pointing up and 3 pointing down? It doesn't tell me anything. You have to have a hierarchy. And so the most important cycle in my hierarchy is the technology cycle. It's a bit more important than demographics, and the geopolitical actually has the biggest impact on stock valuations through fear. It doesn't affect growth that much, like the technology and demographics, urbanization too, part of it, basically will tell you where growth's going anywhere in the world. So what I do is tell people the best way to get to know us, read the latest book, especially because it's already going to be more out there. I got another one coming out probably early next year, probably going to be called The Tipping Point, or 2020, The Tipping Point. But I got a free daily newsletter, harrydent.com. You just go there, put in your email address. That's all you do. And we have a daily newsletter that keeps us up with what we're thinking. And then we have other newsletters that people say, oh, I want to learn more. But hey, just get to know us, because we are saying something very different. You can't go to other economists and say, oh, let me see if they agree with Harry. I can tell you right now, they will not agree with me. They never have. And I forecast most of the major events that have happened since I got these tools starting in the 80s. And they've missed almost all of them. They missed the Great Recession.
Yep.
They missed the real estate bubble. Robert Shiller was the only economist that got that. Only one out of zillions.
Yeah. Yeah, no, absolutely. And I would highly recommend all of our listeners check out Harry's works. Harry, one of the things that folks will ask, and when they're listening to our conversation is, okay, we know that we kind of see what's projected to come. We kind of see the massive opportunity. What do we do in the meantime? What are some of the things that folks can do to adequately prepare for what's coming their way so that they are on the right side of this opportunity?
Well, one of the things we look at in the books, you have to have a different portfolio for each season. That's another illusion that you can have an all-weather portfolio. It means you're going to underperform. It's like saying, okay, I live in Washington, D.C., where it gets, snows in the winter and it can be still 90 some in the summer, so I'm going to wear jeans and a sweatshirt all year. Well, you will not do well most of the time in that outfit. So the key insight in winter, since it is this great reset after a bubbly fall boom season, as we come out of, the field is narrower. High quality bonds, the U.S. Treasuries, the longest term, the better. The 30 years, you can still get over a 2% yield like a stock. And yet, when this deflation sets in, like in the 30s, they will go up in value because interest rates will go down to 0 or lower. Cash flow positive real estate. If you're renting out apartments or homes in area and the real estate's not that bubbly, and the most profitable markets are places like the Southeast and Midwest where they're not bubbly, and the investor can afford to rent out a positive cash flow. Well, those properties will hold up better, but that cash flow in your tracker will allow you to buy more properties when they go down in value and convert them into rentals. So that, and then the U.S. dollar. Gold bugs are saying gold's going up and the dollar going down. Well, how come that's not what happened in 2008? U.S. dollar went up 27% while gold went down 33% and silver 50%. So really you have to get out of all risk assets. And you can't say bonds, only the high quality bonds. A junk bond is going to have the risk of default. Yeah, interest rates may go down in its favor, but the risk of default will greatly outweigh that. So you have to be in high quality bonds. Yeah. Get out of all risk assets just for a couple of years. And they're so overvalued now, how much more can you miss?
Right. Right. Yeah, no, absolutely. What are some of the things that you're studying right now? You said you were working on another book, but what is some of the stuff that you're studying and learning and watching as we enter, and I can't even believe I'm saying this, we're entering the next decade, and what is it, like around 90 days? But what are some of the things that you're studying, learning, and watching as we go into the next decade?
Well, one of the things I did, we had a company meeting and I brought up, because I always, since I study different stuff, I always have different insights. I said, my next topic, I want to be why India is going to be the next China. And India will never be that. They're backwoods people running around loincloths and all poverty and shit. I said, have you been to India? I have been many times. Yeah. India is the next China. I looked under the hood. the difference between India and China is China's had this massive urbanization over stimulus program, and it's now 59% urban. India is still 34, 35%, almost like sub-Saharan Africa outside of South Africa.
Yeah.
Backwards because of that. When I look at how rich GDP per capita was China at the same stage of India today, India was more wealthy. What is India's projection of GDP per capita growth with urbanization? It's higher than China. India is underinvested in everything. China's overinvested. India is a slam dunk. It's the only large country in the Asian continent outside of China who's overdone it. Now, China still has potential for urbanization, but their demographics are already down, the only emerging country. India and Southeast Asia are the next big boom in the world when it turns around. Developed countries are going to struggle to grow, and in China, it's going to take 5 to 10 years to come out of this overbuilding. So I'm looking at how do you invest in that, and I'm literally writing an article right now basically proving why India, unless they royally screw it up, and Modi's doing all the right things, even though he's having a lot of challenges and stuff, unless they royally screw it up, they are going to be the largest country in the world, and they're going to basically, and Asia is moving towards another cycle peak, 165 years, many decades from now, where it will be the dominant place in the world as the West does finally fade into sunset. So India and Southeast Asia is my focus right now. That's the best place to invest coming out of it.
Very interesting stuff, and that's on my bucket list to travel to that country, because I've just heard a lot of great things about it, and I love the people, and I'm a big fan of the food. So I'll be watching some of the content that you put together about that in your articles as well. Harry, where can my listeners reach out to you guys? Where can they learn more about you? How can they follow you, and how can they stay informed of all of the projects that you're involved with, and also how can they get copies of your books and the latest book, 0 Hour?
Yeah, best place to get. I mean, we don't even sell it that much now because Amazon's always got as good or better price than we can afford.
Yeah.
So get 0 Hour on Amazon, harrydent.com, as I mentioned earlier. That gets you on our free daily newsletter. And then through that, you'll learn more about our other newsletters and stuff. For people who are really interested in my newsletters, the best deal we have is Boom and Bust Elite. That combines 2 newsletters from me and some newsletters from other people, and the range of investment and stuff. That's the best package we have for somebody serious about our stuff. But I say, hey, you can't go wrong, getting on our free newsletter and just listening to us. And again, we're saying controversial stuff now. And I just put out an article literally this week in the free newsletter saying, guess what? Everybody's saying bonds are done. No, the bond bubble, the Treasury bond bubble is the last to burst. It's the one thing that holds up is the flight to safety. So it only bursts when everything else is burst. So don't believe Wall Street when they say, oh, you better get out of bonds now. That is actually the place to be.
Yeah. Absolutely. And I would highly encourage listeners to take a look at it. My personal philosophy is I don't like echo chambers whatsoever. So I like a ton of different ideas, contrasting ideas. I like one guy that says gold is going to go to the moon. The other one says that gold is going nowhere right now. And then, that's how we learn, right? Seeing all the many different sides of it. Harry, I really appreciate your time. This has always been fascinating and very, very enjoyable. And I really appreciate you coming on the show and sharing all this valuable information and your knowledge with all of my listeners.
Okay, great. We'll do it again sometime.
Life settlement investments have allowed financial and banking institutions to not only buy their equity contractually, but also diversify their capital from any economic, market, and geopolitical risk. It's been part of the billion-dollar blueprint followed by institutional investors. And if you're an accredited investor, you can also now participate in this vehicle with enormous growth potential. You can watch an informational webinar presented by one of the premier organizations providing life settlement investments, Penumbra Solutions, at cashflowninja.com/life settlements. Thank you again for joining me on the Cashflow Ninja. If you like what you hear and appreciate what we're trying to build here, please subscribe, rate, and write a review for our show on iTunes and share our show with family, friends, and your network. If you're not a subscriber to our newsletter, you can sign up for our newsletter at cashflowninja.com. I want to thank you for spending your most precious resource with me today, your time. Until next time, my friend, live a life of passion and purpose on your terms. This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objectives, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or completeness.